Treasury yields saw a big move higher today as political tensions eased, as we maybe are getting a sense that we're near some kind of resolution with China and U.S. trade. What's happening in Washington maybe taking a turn for the better. And I think at this point, the market just has been all over the map. We've seen lower yields this month. We've seen higher yields this month. We're right now somewhere in the middle. And it seems to me the market is very tired. Now, I think it will lean towards flight to quality, lean towards lower yields as we move forward until there's real resolution. But at this point, we're seeing a very choppy market, and I think there's a lot of uncertainty still out there, which will give us a reason to be buyers if things continue on that path. And if you look at market volatility, we've seen very much a move as yields go higher, vols go lower. So we trade back into that old range. The market gets all comfy. We didn't see that today. We didn't see it yesterday either. Volatility's remained stubbornly elevated here, which is a good thing because there is a lot of uncertainty and there is a lot of what ifs out there. And volatility, which has remained so low since the Fed got heavily involved over a decade ago, it's nice to see volatility starting to come back to the market. So we are seeing a modest bid to volatility. Levels remain elevated. We haven't seen a big spike lower as we typically had in the past. And I think at this point, volatility is very suggestive of the fact that, yes, yields are going higher. Yes, there may be a bit of normalcy happening, but there isn't any clarity for the future. And at this point, the future being trade deals with China, Fed policy, and global growth. All of those things are still very uncertain, as well as you throw in that thing called Brexit, which hasn't really had a resolution. They're having their own issues over there now politically. I think it's just going to add to more. So right now we're seeing the dollar bid, we're seeing yields go back higher, but I don't know for how much longer we're going to see that happen. And if you look ahead, the focus has to remain on what's going on with China, because that has been the real key piece of data that's moved the market. Yeah, we'll keep a look at what's going on with economics, and we have employment next week. Likewise, we'll keep an eye on some of the manufacturing data we have at the beginning and beginning of the month. But ultimately, it's going to come down to, can the president get something through that makes sense for both sides, especially for the U.S.? And I think at this point, the Fed will take a back seat to that. We aren't going to really hear much more rhetoric about the Fed until we get to the middle of October. We start looking at that end of October FOMC and whether or not they're going to cut. Right now, the market's still pricing in another 25 basis point cut, but not until we get to December. So there's still some time there for things to change. So right now, Treasury yields hovering near the midpoint of the month, which has been a crazy month for Treasuries. But right now, as we lean towards going higher, I think there's going to be some buying opportunities there until we get resolution and clarity with all the other issues.